You're listening to Carrie Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. Well, markets are up a bit today. Volatility is the word. But what does that mean to you? You know, markets are down substantially, getting into bear market territory. Will it last? How does that affect your retirement planning, your planning for your kids' college, all these things? Got an expert with us, Matthew Murawski. And Matthew, you've been at this game. You were in venture capital before. Now you're really getting into the nuts and bolts of wealth management. Tell us what your philosophy is of investing, especially in a market like now.
The old adage, dollar cost averaging in a market like this, because where I've gone wrong in the past, I've always been a little bit early. I like to buy the dips. I like to, I've got clients that are that are 30, that just turned 30. I've got clients that are turning 90. So you've got the wide range of people that you're dealing with. But in a market like this, it's all about zooming out. If you're buying stocks, if you're taking ownership in companies, you got to take a long-term view because anything can happen short-term. But the way I see it is you've got the best companies in the world that right now are on sale. And could we go another 10%? For sure, we could. But I think when you look back at this 2, 3, 4, 5 years from now, I think all of these prices are going to look much like March and April of 2020. Not quite as bad, though, about half as bad. So it's a pretty exciting time to be investing. All right.
So, but it could go down more than 10%, couldn't it?
Oh, yeah. I mean, yeah, it can go down much more than that. There's the downside. I think by technical analysis, you're probably looking at worst case 3,400 on the S&P, but nobody knows. If anybody had a crystal ball, that they wouldn't be sitting here. But nobody knows. But the reality is, if you try to time the exact bottom, I can find a lot more fruitful things to do rather than try to time the exact bottom. So you just look for great companies that are on sale, and there's quite a few of them.
Yeah. Well, one thing I've learned in the market is, as low as a stock might be, it could very well go lower, couldn't it?
Yeah, it's all that. It's that question: how much could I lose? Well, the stock's down 75%. How much could I lose? You could still lose 100% of your money. It's there's the carnage out there right now with especially the high valuation stocks being down 75, 80%. It is kind of unreal. But the reality is, it's like, I'll put it in here because I can't get hurt. Well, you can always get hurt. You can always lose 100% of your money. And if something gets cut in half by 50%, you and I both know, but the average person doesn't realize it's not 50% move back up that gets you to even. So you have to be delicate.
All right. So you a dividend investor, cash flow, or capital appreciation, or all of the above?
All the above. Just it has to fit each client. And I would say, the high end tech names, such, think of like the semiconductor, like NVIDIA and things like that, have come way down. I think they have some ways to go yet. I think they get cheaper yet, but you got to, it's nice to have, you could really, I'm not a day trader. I'm not trying to time the get in and out of positions, things like that. So when we're really building wealth for people long-term, especially as of late, it's really nice to have those, very unsexy, boring dividend paying stocks. Cash flow is king when rates are looking to go up, and you've got inflation that is just booming. So yeah, you want to have right now, I'd say you're the safer part of the market, if there is such a thing, would be your high cash flow, free cash flow, dividend yield kind of companies, because inflation is just out of control.
All right. So we'll talk about inflation in a minute. What about a stock like Tesla? It's trading 50% of its prior high, just about. today. It's up a little bit, but it was down to 50% of its prior 52-week high. Is that a buy here, or is that does it have more to go? What's your margin of safety here?
Man, I don't think you have much margin of safety. I love Elon Musk. Just what can you say? He's the rocket, SpaceX, Tesla, the Boring Company, Neuralink. I mean, the man's a genius of our lifetime. The reality is the stock is different. So it's still a very expensive stock, even though where it is today. I do own the stock for clients, and I do own it personally in the family. So I think it all depends on if there's enough damage done to the market and we get a little bit of that wealth effect taken down. Maybe the Fed's not as aggressive, and I think you see stocks like Tesla just go right back up. But if they hit with 100 basis points, then 50 basis and 70, if we're looking at 2% rise in yields over the next month, 2, 3, 6 months by end of year, it would be hard to it would be hard to see companies that are that expensive really flourish. So I think right now, if you look out, it's something that I own. I'm not worried about where the stock trades. I own it because I want to, in 10, 20 years, I think it's a much bigger company than a car company, but I could be wrong. It's just an opinion. And the risk reward right now, I think, is to the downside, though, with rates coming up and valuations just being squeezed. So.
Yeah, well, it's trading at a highly discounted 89 times earnings now. So maybe it's the time to jump in because it's trading less than 150 or 200 times or 1,000 times earnings. Isn't it interesting, though, the way that the market works, that, Tesla's been chopped in half during this time, but their business is going up 50% a year, and it's been up, even though the overall car market has been down. So the baby gets thrown out with the bathwater, or Tesla's just bathwater.
I think other than energy, which was considered deemed uninvestable just a year ago. If you listen to any economist or anybody on any pundit, they all laughed at energy, and now look at energy. It's the only thing that's up in just about every portfolio. But I think it was thrown out a little bit with the bathwater. It is an extremely expensive company. However, when I talk to clients and they ask about it, or we're talking about building a portfolio and risk management, I say, hey, listen, at the end of the day, if you want my opinion on Tesla, I'm comfortable putting my money with what I deem to be, if not one of the smartest people on the planet. And I'm not buying something at 89 times earnings because I think it's a great car company. In my opinion, if you're buying Tesla, you're buying Elon Musk, but you're buying a longer term energy storage and kind of company. But who knows if they're successful on that end or not. And if you're buying it right now, you gotta be able to know that you might have to buy it a few times. Because if we come out with a big, 2-3 months of rate hikes, I could see that coming down, like we just talked, even though it's down 50%, you can still lose 100% of your money, so it's highly volatile. But also at the notice of inflation peaking or the Fed easing off rates, I think a lot of those stocks just burn to the upside on momentum, but we'll see what happens.
Okay. So speaking of inflation, what's your take on it? Obviously the rate is much higher than the official government statistics, the CPI. I mean, if you just look at the prices of imports and exports, you're seeing double-digit gains, right?
Don't just survive. Thrive, the Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, it's I can sum up inflation the best by I was in the office the other day and the FedEx lady came up delivering packages and was talking to the front desk receptionist here, and they were talking about driving around to different supermarkets because certain days of the week certain things are on sale, and they go and they're trying to figure out how they're gonna the FedEx lady was talking about getting pot roast and finding a way to cook it to make it last twice as long because the food costs are out of control. But then how do you can't go and shop everywhere because the price of gas here in California, it's almost $7. So the inflation is so far beyond what the CPI number is. I mean, it's out of control. And it's really hard to put that genie back in the bag. And they, as my grandfather would say, they really screwed the pooch on this one. And it's just, I don't think we'll hit hyperinflation, but it's not looking, I don't think it's going to come down nearly as, wages once they go up, don't really come back down. When certain prices come up, energy prices can come down, certain food prices can come down, but inflation's here to stay well above 2 to 3% for, I think, quite a while.
Couldn't agree with you more. And what the real rate of inflation is, who knows? But, the idea of a recession, well, we had negative GDP growth last quarter of 1.44%. In reality, if you factor in the higher inflation rate, we've probably been in a recession for a while.
Carrie, you're the first person I've been saying the same thing. Like, they're talking about recession, maybe end of the year or next year. I'm like, it's not going to take much to have another negative quarter, and boom, that's textbook recession. Like it's not. It's going to be one of the strangest recessions we've ever had because unemployment is so low. There's even though jobs, you're starting to see the job market tighten. By tighten up, I mean stop, slowing hiring. But there are so many jobs out there, and the Great Resignation, the term that got termed. I how many friends I have that they're just picking where they want to work. So it's a mess. It's a real mess.
And energy costs, natural gas is heading towards $10 per MCF. Natural gas, much more important to the economy than it was during the 70s. Right now, every available well in the United States is producing full out. And we got huge exports to Europe taking place, LNG. Everything's a big mess. And I guess it's just going to have to sort itself out. We had excess speculation in the markets for years. Now that's coming to an end. Just for your average investor trying to save some money for his kid's college, her college, or her retirement, it's a really challenging environment, isn't it?
It's challenging, hand-holding a little bit, but you and I both know that these kinds of problems, just like that saying, I forget who the person that quoted it, but volatility is an investor's best friend. It is absolutely true. You wouldn't be investing in the market today or yesterday or next week if you didn't think that the future was bright. So you kind of got to believe in that there will be a future and that it will be, without, have problems. We'll always have, we just go from one problem to the next problem, from COVID to the Ukraine. From the Ukraine, once that got boring with the news, then they went back to COVID. Now we're on to monkeypox. Now we're going to be on to the next thing. There's always the next disaster because the world is a massive place. But it's if you're watching your statements week to week, month to month, even quarter to quarter, the first half of this year, you're probably pulling your hair out, going crazy. But I think in hindsight, all of these issues that are creating these huge dislocations in the market and have crushed, I think I'd have to look at it. I know the market's up a little bit today, but the NASDAQ's down somewhere near 30%, somewhere rough left. I'm within 5% there. I'd have to take a look at a chart. But if you're for the short-term trader, which is not something I know how to do, I don't know how to get in and out of stocks much better than anybody else. But when you're investing to the mid to long term, I think all of these issues are creating a great opportunity, not without some serious stress. But I think 3 to 5 years from now, I think these prices are all going to look cheap, in my opinion.
All right. Well, hey, if it just keeps up with the rate of inflation, if it only does that, can you imagine? It reminds me, we're starting to get inflation jokes again. There was one I remember from the 70s where a guy gets cryogenically frozen. He wants to come back in the future, and they defrost him. And the first thing he does is go to the phone and calls his broker, says, "How's my portfolio doing?" "Oh, you can't believe it. It's really gone up. You're worth like $500 million. And then he says, "Oh, that's great news." Hangs up the phone, and then it rings back, and the operator says, "That'll be $100 million. So, hey, but
yeah.
The future is always uncertain. Nobody can predict it, but you do the best you can. Hey, people want to know more about you, talk to you about how you plan for college, retirement, etc. Where's the best place to reach you?
I like best place to reach me. You can find me through our website, goodsteinwealthmanagement.com. I post videos. Since 2018, I've been doing things on Instagram, Facebook, LinkedIn. I just make things that I think are interesting and kind of time worthy. I put, Murawski.mj is my Instagram tag. And that's where I spend, my time there talking about things, and, can always find me through the website.
All right. Hey, and if you got a question for Matthew, you can always shoot me an email, kl@kerrylutz.com. We'll get you an answer. Make sure you go over to the site. You can click the links and get right over to Goodstein Wealth Management. It's financialsurvivalnetwork.com, and sign up for your free newsletter. Matthew, really appreciate you coming on. We'll talk to you again soon.
Hey, sounds good. Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.